Welcome back to Explain the Charts, your go-to channel for comprehensive market insights. Today, July 31st, 2025, we're dissecting the USDCHF currency pair, offering an in-depth analysis that incorporates both recent global events and granular chart data. The current sentiment around the US dollar and Swiss franc is particularly intriguing, showing a distinct divergence between short-term and long-term perspectives. Recent headlines indicate a notable shift in the Swiss franc standing. Trading Economics reports that the Swiss franc has weakened by a significant 2.5% over just the past month, which has translated into an upward climb for USDCHF. On July 30th, 2025, the US dollar to Swiss franc rate increased to 0.8104, reflecting this weakening, with our latest daily candle closing even higher at 0.8131. This aligns with reports from FX Street suggesting that the US dollar to Swiss franc is advancing as safe haven demand for the Swiss franc diminishes, pushing the pair towards the 0.7950 level, though we're already well past that now. Adding to this, UBS has lowered its forecasts for the Swiss franc, a move that generally signals a more bullish outlook for USDCHF. However, there's a contrasting view from Bank of America, which anticipates selling pressure on US dollar to Swiss franc as the month of July concludes, suggesting a potential pullback. Despite these immediate bullish indicators for USDCHF, it's crucial to consider the broader context. YChart's data reveals that, compared to 1 year ago, the US dollar to Swiss franc exchange rate is actually down by a substantial 8.95%. This indicates that while the Swiss franc has seen recent weakness, its long-term trajectory has been one of significant strength against the US dollar. Now, let's turn our attention to the daily chart to visualize these underlying trends and key price levels. Observing the full range of data from March 2024 to the present, the overarching long-term trend for USDCHF has been clearly bearish. The pair has consistently formed lower highs and lower lows, signifying a dominant downtrend over this extended period. Initial resistance levels were seen around the 0.91 to 0.92 zone back in March 2024, holding firm as the price moved lower. This prolonged depreciation of USDCHF underscores a period where the Swiss franc gained considerable ground against the US dollar, driven by various macroeconomic factors. The consistent downward slope demonstrates strong fundamental forces that have been favoring the CHF in the past year. Identifying these long-term resistance areas is vital, as they represent significant price ceilings that would require substantial bullish momentum to overcome. The overall picture on the daily chart screams bearish for the US dollar against the Swiss franc. Delving deeper into specific periods, let's highlight a crucial point in the daily chart: the dramatic plunge in early April 2025. Between April 2nd and April 4th, the USDCHF pair experienced an intense sell-off, with the price plummeting from approximately 0.88 to below 0.86. This sharp decline, marked by large bearish candles and increased volume, broke through several intermediate support levels, confirming the strong continuation of the bearish trend at that time. This kind of impulsive move often suggests a significant fundamental catalyst, such as a major economic announcement or a shift in central bank policy, although our provided news doesn't specify one for this exact date. Following this, the pair found temporary consolidation around the 0.84 to 0.85 levels, which then subsequently acted as resistance. The strong volume accompanying this drop indicates high conviction from sellers, pushing the price decisively lower and reinforcing the downtrend. Understanding these strong impulse moves is crucial for identifying areas where significant market sentiment shifts occurred. This period serves as a stark reminder of the underlying bearish pressure on USDCHF throughout much of its recent history. However, the most recent action on the daily chart tells a different story for the short term. Looking specifically at the latter half of July 2025, we can observe a strong bullish reversal taking hold. After hitting lows around 0.79, the pair initiated a robust rebound, with several consecutive green candles indicating renewed buying interest. The large bullish candle on July 30th, closing at 0.8131, is particularly significant, demonstrating powerful upward momentum and a substantial price change. This recent surge aligns perfectly with the news reports indicating a short-term weakening of the Swiss franc due to diminished safe haven demand. The low of 0.79 to 0.792 has effectively served as a solid short-term support zone, preventing further declines and providing a launching pad for this rally. The volume also picked up during this ascent, confirming that this move is supported by active participation. This immediate price action suggests that the short-term sentiment has turned bullish, at least for now, challenging the dominant long-term bearish trend. Let's transition to the 1-hour chart, which provides insight into the intraday dynamics and volatility during the period from July 10th to July 15th, 2025. During this mid-July period, the chart shows USDCHF trading within a relatively tight range, oscillating between approximately 0.7950 and 0.7980. We can observe periods of slight bullish pushes followed by pullbacks, indicating a market searching for direction. The volume during this consolidation phase was moderate, reflecting a period of equilibrium between buyers and sellers. While not showing the very latest surge, this hourly view confirms how the market was consolidating at higher levels after bouncing from the 0.79 support mentioned earlier. These short-term fluctuations are typical in forex markets and provide opportunities for scalpers or day traders looking for quick moves. It's important to note how this hourly consolidation preceded the more decisive move seen on the daily chart in late July. Understanding these shorter timeframe patterns is crucial for timing entries and exits as the larger trends develop. For the most up-to-date granular view, the 15-minute chart, covering July 25th through July 30th, truly captures the recent bullish explosion in USDCHF. Starting from the 0.794 area on July 27th, we can see a clear and aggressive upward move, confirming the strong buying pressure that culminated in the large daily candle. Multiple consecutive green candles with increasing volume highlight the conviction behind this rally, indicating a significant influx of buyers. Minor pullbacks on this time frame were shallow and quickly bought up, signifying strong demand and limited selling interest. The climb from the mid 0.79s to above 0.81 is clearly detailed here, showing a consistent staircase pattern of higher lows and higher highs. This strong short-term momentum is a direct technical manifestation of the news, indicating diminished safe haven demand for the Swiss franc. The breaking of intraday resistance levels on this chart provides clear signals for short-term traders looking for continuation patterns. The price action on July 30th, where the pair pushed towards 0.8150, underscores the strength of this current short-term bullish reversal. This rapid ascent suggests that the market is quickly repricing the pair based on the latest fundamental shifts. Monitoring these microtrends on the 15-minute chart is essential for precise trade execution and risk management. Based on this confluence of technical and fundamental factors, let's discuss the short-term outlook for USDCHF. The recent strong bullish price action on the daily and 15-minute charts, combined with news of the Swiss franc's weakening, strongly supports a continuation of the upward momentum. The successful defense of the 0.79 to 0.792 support zone suggests that a temporary bottom has been established. A break above the immediate resistance at 0.8150 would confirm this bullish bias and could pave the way for a move towards the next significant resistance level. We project a 65 to 75% likelihood of USDCHF testing the 0.82 to 0.825 area in the short term, especially if global risk sentiment continues to improve, further reducing the CHF's safe haven appeal. Reinforcing conditions for this bullish scenario would include weaker-than-expected Swiss economic data, sustained hawkish rhetoric from the U.S. Federal Reserve, or any geopolitical events that favor the U.S. dollar. Traders considering long positions should look for confirmed breaks above current resistance and use pullbacks towards established support as potential entry points. Volume analysis on these smaller timeframes will be crucial to confirm the strength of any further upward moves. However, when we consider the long-term perspective for USDCHF, a more cautious or even bearish outlook emerges. The year-over-year decline of nearly 9%, as highlighted by Y charts, indicates that the underlying fundamental strength of the Swiss franc remains a powerful force. This current short-term bullish rally could be viewed as a significant correction or a retracement within that larger downtrend. For a true long-term bullish reversal for USDCHF, we would need to see sustained breaks above more substantial resistance levels, particularly the highs seen in March 2024 around 0.88 to 0.91. The likelihood of a long-term bearish continuation, seeing the pair fall back towards the 0.79 support and potentially the 0.7567 major low, is approximately 50 to 60%. This would be reinforced by a re-emergence of global risk aversion, increasing demand for safe haven currencies like the CHF, or a dovish shift in U.S. monetary policy. Long-term investors might consider selling rallies into resistance or waiting for clear signs of a breakdown below key support levels. Therefore, while short-term movements may offer opportunities, the macro picture suggests a challenging environment for sustained USD strength against the CHF. To recap, several important price levels are on our radar for USDCHF. On the upside, immediate resistance sits around the 0.8150 mark, with the next key targets at 0.82 to 0.825 and then 0.8350. Successfully breaking and holding above these levels would be critical for a sustained bullish continuation. On the downside, the crucial short-term support is established at 0.79 to 0.792, which has recently proven resilient. A decisive break below this would likely open the door for a retest of the significant long-term low at 0.7567. The short-term outlook is cautiously bullish, with a 65 to 75% chance of reaching 0.82 to 0.825 if diminished CHF safe haven demand persists. However, the long-term outlook leans bearish, with a 50 to 60% likelihood of revisiting 0.79 and potentially 0.7567 if risk aversion resurfaces. Looking ahead, keep a close watch on upcoming U.S. and Swiss inflation reports, employment data, and any statements from the Federal Reserve or Swiss National Bank. These economic releases often act as significant catalysts, driving volatility and providing clearer direction. Remember, informed trading involves not just understanding the charts, but also staying abreast of the fundamental drivers influencing currency pairs. Happy trading!